welcome. You're watching First Stick here on News9, where we bring to you the morning update on the Lal Street. I am Suyash Maheshwari, and with me in the studio, as always, is Amit Ranjan. And it's a Friday morning, and the Indian markets, they are back in the red. Nifty opened with a cut of about 80 points. So it's pretty much holding above 22,000 for now. But, given how sharply the markets tend to move these days. I mean, ever since COVID actually, the corrections that used to play out over months are now happening within weeks. So the point really is, maybe it's best to avoid taking aggressive bets on either side right now, because the markets, they can move sharply in either direction and in no time. So if you're caught on the opposite side, it could turn out to be a bad weekend for you. But yes, there are some headwinds out there. Some of them are global too. Amit will fill us in on that.
Red is the color today. Everywhere it is red, and the anticipated US producer price index data was out yesterday. It held steady at 2.0% year-on-year increase in February, surpassing expectations of a 1.9% increase. Monthly, the report indicated a 0.3% uptick compared to a previous 0.5%. outperforming the anticipated expectation of 0.2% reading. Now, what this has done is that this has attributed to the US dollar gaining, strengthening, buoyed by the robust PPI data, and signaling ongoing inflationary pressures on the economy. Probably that has played out into the market because the rate cut may be that much more cautionary by the US Fed now. Dow Jones closed in the negative at minus 0.35%. S&P 500 closed in the negative at 0.29%. Nasdaq closed in the negative at 0.30%. Similar story in the European market. Stock 600 closed in the negative at 0.18%. The Hang Seng, which had been in the positive for some time after the announcement of the 5% target by the Chinese government, is down as much as 2.13% this morning. Nikkei is down 0.16%. All the stocks, whether it's Nvidia, Tesla on Wall Street, are down, but for one, that is Apple. That's in the positive, the only green.
The only green, and that's Apple. But here, there are problems because the markets, after opening in the red, we were holding about 22,000, by the way, still holding about 22,000. But the markets, they were trying to move higher. The broader market especially, I mean, we were seeing a 0.5% to 1% recovery this morning in the opening trade very much. As you can see on your screen, as of 9:30 a.m., both mid-cap and the small-cap indices were in the green. But in the last 15 minutes, they have, reversed course. Both indices are now down about 0.5% or so. And, if you look at the Fibonacci retracement levels, mid-cap index by the morning trade had recovered about 38.2% of that entire fall from record level of 49,780 to that recent low which we saw on Thursday of 45,293. The small cap index had also arrested 23.6% of its fall from record to recent low, but we are seeing a reversal from those levels. So maybe Fibonacci retracement levels is something that you can take cues from. But again, as I mentioned at the very opening, the markets could move sharply in either direction because see, broader markets, both of them were in the green. Now they are back in the red. We are seeing a % move from green to red and red to green. So, I mean, if you're caught on the wrong side, like, it could spell some trouble. But to get, views on the market and more importantly, understand what happens, over the next couple of months, let's also bring on Mr. Avinash Gorakshakar of Profit Mart Securities. Thank you for joining us here on News9, sir. I mean, after that midweek meltdown, the markets, they bounced back in a big way yesterday. I mean, the small cap index that gained about 3.5% of the 5% it lost on Wednesday. Investors were able to recover close to about 9 lakh crore of the 13.5 lakh crore, and even the breadth at 5-1, meaning 5 stocks rose against one that fell, was overwhelmingly back in the favor of bulls. I mean, what's your sense of things? Was it smart recovery or just a dead cat bounce?
I think, Suyash, first of all, good morning. My sense is that, the markets are going to remain volatile. Clearly, now the news flow on the electoral bonds issue, petrol, diesel price cuts and the mutual fund stress test, these are very important developments. which I think clearly are going to be very important. Plus, on the coming 20th of this month, we would be awaiting the Fed policy again. So my sense is, these kind of temporary ups and downs are not going to be sustainable. I think at higher levels, we could see some selling pressure coming up again. And I think the broader market is the one where I think investors should keep a close watch. If you look at the small cap, mid caps, most of the smaller SME companies, price corrections of almost 30-40% has happened. And I think it's going to take a long time for these stocks to actually recover again. Regulatory measures have also been quite stiff. I think IPO funding has been again put under a very strict watch. So my guess is that I think one now has to be extremely selective. I think clearly the markets are now going to be await the election schedule. And I think the elections are now going to be the key trigger point. I think in all probability, the month of March has been a March where volatility is always very high. But I think starting April, I think you're going to see a lot of volatility in. So I think, Suresh, there is no hurry in actually buying stocks immediately. We have been telling our clients to be very selective, start accumulating some of the larger cap names, which have not moved up at all. And where I think the risk reward is far better than the small and the mid caps. I think names like Ashok Leyland, Tata Motors, Mahindra, something like a Larsen and Toubro, something like even typically an India Cement, or maybe even stocks from the engineering space like Cummins. I think these are definitely good defensive bets in this kind of volatile market. So I think it's going to be a very choosy market. Just looking at the index will not give you a true picture of the market. But I think, yes, there is going to be a lot of volatility. These kind of bumps, ups and downs are now going to be a regular feature till the election is complete.
All right, volatility is here to stay at least till the election results are out or election is done. I mean, but from a global perspective, the trifecta, as we call it, the 10-year bond yields in the US, the dollar index, and most importantly, Brent crude prices, they have moved against us. Brent crude for one is up 4% this week. It's back above $85 a barrel. I mean, is this going to be a problem for us in the upcoming months? Because not many have been talking about this. We have been focusing on mostly the domestic factors, but there are some troubles spelling in the global arena as well.
No, I think you're right, Suresh. I think global crude prices, if they move up by further 4-5%, I think that could definitely mean a more problematic situation for the oil marketing companies. I think everybody was expecting that ahead of the election, petrol and diesel prices could be cut. I think that cut has now come in. I think companies like HPCL, according to us, would be the significant, possibly the most significantly impacted. I think companies like BPCL, IOC are not that badly impacted. And the good part is that even as of now, the throughput from aviation, automotive sectors continues to be pretty healthy. So I think any further spike in crude oil prices is definitely something the markets have not factored in. And that could obviously put a dent in these oil marketing companies, which actually are momentum-based stocks. Whenever crude prices come down, there is a big jerk in the stock price. Overall, the markets are also now looking at how the Fed policy pans out. I think clearly inflation has toned down, but what could be the commentary from Fed? I think that is something which would be very importantly noted, because clearly I think the markets are now waiting when the first rate cut could happen. So I think, globally inflation, and secondly, obviously other macroeconomic concerns, specifically on the job rate growth, on the inflationary kind of concern. These would be data points which I think even markets, Indian markets would be closely monitoring. And obviously that would be related to, the local RBI, how RBI would be reacting to this, and probably when we could have our first rate cut. But I think the first agenda on everybody's mind is obviously the election schedule, which would be rolled out very soon. And I think after that, you could see a lot of volatility till the final election date comes and we go to elections. But till then, I think markets are obviously going to be in a zigzag fashion. You won't be finding a linear upside in the markets at this point of time.
Good morning, Mr. Gorakshakar. Now, you spoke about reduction in crude oil prices. Now, the Indian government announced a rupees 2 per litre cut in petrol and diesel prices yesterday. This comes on the back of the brokerage firm CLSA, which had recently downgraded and reiterated its sell recommendation for the big three oil companies in India. When I look at the stocks of these three companies, I mean IOC, BPCL and HPCL, last 5 days they have been in the negative. Last 1 month they have been in the negative. But they have given stupendous results, especially IOC and HPCL in the last 1 year. What do you make of these big three? Which way are they going? They have been downgraded on one side. The reduction in prices probably will help them, especially IOC, as you mentioned.
No, I think, see, most of the price cut, which you rightly mentioned, in the last 1 month, these stocks have been battered down. So I think this price cut for petrol and diesel, which has happened, I think most of the negatives are in the price. But yes, if crude prices further increase, that could possibly be a little more negative for these companies. And I think HPCL seems to be the most vulnerable. According to us, HPCL, has a high component of diesel. As far as BPCL and IOC is concerned, I think the damage is not that much, at least as of now. But as I mentioned clearly that, if crude prices go up, and obviously the current momentum actually shows that there is some uptick happening in the crude oil price, that is definitely not a good sign, because obviously oil marketing companies, the entire profitability is dependent on the crude which they import. So I think clearly, despite a very strong throughput seen in automotive and aviation kind of, segments, we could see a little bit patchy kind of moment. And yes, I think these companies have made a huge amount of money in the past 2 to 3 quarters because of softer crude prices. So I think going forward, the trajectory will depend on how, the crude oil prices internationally are maintained. If there is a rise of 3-4% further, that could obviously create a significant dent in the profitability of all these companies. So we have been advising our clients to stay put, no fresh buying suggested. But I think whoever is holding on to stocks like IOC, BPCL can definitely hold on. I think today also the prices have not corrected that significantly because, as you mentioned, the price erosion has already happened in the last 3-4 weeks.
All right, but nonetheless, a double whammy for some of these stocks, because the rise in crude oil, meaning the input cost is rising, so again profit margin takes a hit, and then this because you are bearing the cost of the fuel price cut, so again your profit margin gets hit. So I mean, but we have seen a substantial correction in some of these stocks over the past couple of weeks, as was pointed out by Amit. So perhaps I mean, the situation has like the prices have arrested some of that fundamental shift. But sir, thank you for joining us here on News9. Always appreciate your thoughts and your time. With that, let's slip into a short break. On the other side, Kush Bora, founder of kushbora.com, joins us.
For the very first time in our investigation, we unmasked the killer of Ravindra Mathur.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News9 Plus. Download now.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this. Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
Welcome back. You're watching First Stick here on News9, and the markets, they are getting deeper and deeper into the bearish zone. We have broken below 22,000 on Nifty, currently just sitting about 10-15 points below those levels. Remember, twice or thrice at least in the last 2-3 sessions we have taken support around that 21,900, 920 sort of level. So maybe that is the first support level for us to track. But again, the market, they have reversed course after yesterday's good bit of recovery. Nifty as of 10 a.m. is down 0.7%, sitting 5 points below the 22,000 mark. Sensex is down 0.6%. The mid cap and the small cap indices, they are, the mid cap index is pretty much moving in line with the broader with the large caps, but the small cap index, that's currently the best positioned of the three pockets of the market. It's down 0.22% at 14.755 levels. Volatility, that has picked up, it's up 4% this morning. It's at 14.16. Yesterday we had broken below 14 levels, but at 14.16 I think there is there is not much to be concerned about, because remember, we were used to spending time around that 15-16 sort of zones. But with that, let's also bring on board Mr. Kush Bora of kushbora.com. Thank you for joining us here on News9, Kush. Always nice seeing you. And that we have broken below 22,000 this morning. Good recovery we saw, that 150 point on Nifty. But I'm looking at the price charts. In the past couple of sessions we have taken support around that 21,900, 920 sort of zone. Is that a critical support for us now?
Hi, first of all, very good morning to you, to all the viewers, and always a pleasure to be here. I think you've made my life easier, by spotting the key levels on the charts. Also to add, add to that one point that, if you look at the weekly options expiry data, the 22,000 put still has a very strong base, and we've seen about 20-25% odd addition on it. So I think this is a level where the index will perhaps consolidate for some time. Give or take 100 points since there's a spike in volatility. So I think you're spot on there. 21,900 also happens to be the 50-day moving average. So but 21,900 on the downside, and on the upside 22,200. This is the band where the markets can spend some time in. There are pockets which are trying to emerge, especially the Bank Nifty. But looking at Bank Nifty in a very constructive way, see, there was already an underperformance in Bank Nifty, right? So the downside from here may not be as deep. That said, for the past 5 sessions, today included 6 sessions, we are seeing a lower low formation, which is not a very healthy sign. But perhaps it's coming to a point where the risk reward ratio will start being very attractive for a long position. So about 46,000 could be stop loss, and from there on, if the Bank Nifty does recover, 47,200 and then 47,700 are the targets that it could achieve. Also, the fact that the HDFC Bank stock has started taking support, is helping its cause. So I think some of these things will play out. I think we've seen an exaggerated move over the last couple of sessions. I think some consolidation over the next few days is perhaps par for the course.
Good morning, Kush. Now, yesterday we were talking about a new policy in the government policy in the works for the medical and medical devices sector, pharma and medical devices sector. Now, today we have in the news, one of the companies we had mentioned yesterday was Biocon. Now, Eris Life Sciences, which is a chronic therapy focused drug firm, has acquired the formulation business, India branded formulation business of Biocon for 1,242 crores, which is 3.4 times revenue, 18 times EBITDA of the company. The purchase enables Eris to enter into the 30,000 crore injectable insulin market. It will increase their exposure in the diabetes insulin space to 1,000 crores. It's around 50 to 200 right now. But when I look at the stocks of both the companies, whether it is Eris or it is Biocon, they are down today. They have been down the last 5 days. They have been down the last 6 months. Last 6 months, Eris has performed slightly better, slightly in the positive. But last 1 month, last 5 days, and even today, both the stocks are down. Do you think which company will benefit? Biocon has unlocked value by selling a big chunk of their business. Eris has opened up a market. Do you think this will be a turnaround for both the companies? It is not showing right now. Both of them, the stocks have been floundering for some time.
Well, I think, what you said towards the end perhaps summarizes it beautifully, that, the stocks aren't reflecting any kind of enthusiasm. Biocon, there was a brief phase when, it was trending higher along with some of the other pharma names, but this stock does have a tendency to, give way really fast. So I don't think Biocon, from here on as well, despite the kind of news flow that has come in, does still warrant a buy. It's barely holding on to its 200-day moving average. So I think, once that is taken out, 255, 260 kind of zones, we're already there. So if that is taken out in a convincing way, the stock could head lower. Only on a relative basis. And by relative basis, I mean, if you compare Biocon and Eris Life Sciences, Eris is still on a slightly better footing. But again, here also we've seen a stark underperformance. So I think, between the two, Eris might perhaps, hold up for some time. But Biocon, I think, very delicately placed, it might perhaps, slip further. So I think, Eris is something that, if you already have in your portfolio, you can hold on with 830 kind of, a level as your stop loss. Biocon, I wouldn't really, suggest holding on even now. Perhaps, an exit, or don't even consider buying it, at least for the moment.
Considering the injectable market is so huge, do you see Eris, at least as you mentioned, is on a stronger footing, rallying from here on, leveraging their entry into this big market?
Well, from a purely price movement perspective, that is not really reflected. See, you see some kind of a movement that, the market or the stock that starts to, price in. And we did see a bit of that. If you see from, end of Feb up until, early March, the stock did rally from, 850 to 900, 910 odd levels. But then it gave way really fast. And today also, despite the news coming out, there hasn't really been, that much of an enthusiasm that has creeped in. See, mind you, yesterday and today, there have been pockets which have done well, after the kind of sell-off we saw. And if there was ever a case, then, it was today for the stock to perhaps do well. So I will wait and watch. If the stock does sort of, take this in its stride, once the market volatility settles, then perhaps there is a case for going long on Eris from these levels.
All right, and Paytm is another stock that we wanted to pick your brains on. It got the nod from NPCI to continue UPI via State Bank and 3 other banks. Now, the company will function as a third-party application provider. What this means is that Paytm customers can continue using the Paytm app. Although the nodal account will now not be of Paytm Payments Bank, it will be of one of these 4 banks. And Morgan Stanley, Kush is predicting a 57% upside. With a target price of 555. What's Kush Bora saying?
We've actually suggested a buy on this a couple of sessions ago. Although it did slip lower from those levels, but it's heartening to see that it's again come back to those levels and it's actually trading in a profit from where we had suggested. Our reasoning was very clear. The stock had gone into oversold territories. The worst was already priced in somewhere close to 320. Even if you see the recent low that the stock has made is actually slightly above the 320 level that it had fallen to. And now with the clarification coming in, I think there is a room on the upside. Locked in upper circuit, so I don't think you'll get a fresh entry into this today or maybe anytime soon. But if you have, continue holding on to this one. I'll have to agree with Morgan Stanley here. The kind of fall we saw, the recovery could be just as fast.
All right, and one final question from me. The markets, they are super volatile right now. Small cap index and the mid cap index, they were up 0.5% in the morning trade, now down 0.5% in the morning trade. I mean, for traders, it's a playground out there, but what would be your advice to retail investors and traders, especially because in a move and in a time like that when the markets move very sharply, you could be stuck at the wrong side.
Suresh, I think many of them already are, and that's where the pain is, right? I'm glad you asked me this overarching question. Look, there's an old adage, which says that, the higher they go, the harder they fall. And we'd seen the kind of moves that, the mid cap and the small cap names had made over the last month and a half, maybe even, a couple of months. Believe me, I think a lot of traders and investors also knew that, these are unsustainable kind of rallies. Of course, no one ever predicted that, these could fall so sharply and, or at least they didn't anticipate it in their portfolio, right? I think the prudent way to go about, things right now is to one, wait, have patience, because if you're invested in good names, even in the mid cap and the small cap names, I'm fairly confident that, they will bounce back and they might perhaps bounce back sharper than some of the other names. So hold on, don't sell in the panic, scenario. Two, if you have fresh allocations to make, this is perhaps a good time to start entering in small bits, because every time we talk on buy on dips, and when the dips come, either you don't have money or you don't have the courage. So if there is money, it's perhaps time to deploy that along with some courage and start accumulating some of these names. I'm not saying that the worst is over and perhaps we're making a near-term bottom here and the stocks won't fall further, as is the case that we've seen between yesterday and today. But some capital deployment is perhaps a good idea. But I'd resort to my first statement. Do not sell in panic. If you're invested in quality names, your holding period will perhaps be a little longer, but you might see your rates sooner than later.
Some capital deployment and probably cautious courage is what you're saying. But Kush, what do you advise our investors, your pick for our investors today?
Sure. So for a while, in fact, I remember the last time around also I was here, I had suggested shifting from mid-cap names to large-cap names. That theory continues. Today, what we've got are two stocks, Geo Financial. You'll recall we've discussed this a couple of times. 350 was a target. The stock overshot that by some margin and has come into a bit of a profit booking. So I think Geo Financial is something that you should have on your radar. 365, 370 is perhaps a good level that the stock can retest. So have this in your portfolio. The other stock is Siemens. What a beautiful run this has had, and it's not even participated in the downfall. So I think 4850, 4950 are the levels that you should have as the targets. 4650 should be your stop loss from a near-term perspective. So stick to quality names. These dips are a good entry point, given that the India story is very much intact.
All right, Geo Financial Services and Siemens are the two picks for the short term coming from Kush Bora. Sir, always a pleasure speaking with you. Appreciate your time and your thoughts.
Likewise, and have a great weekend ahead.
You too, sir. But before we wrap things up, let's look at how the markets are doing, because we are hovering around that 22,000 zone. We have not yet broken below that 21,900 support level we have taken in the past couple of sessions, and it is going to be crucial. Kush said the same thing. So 21,900 is perhaps something you need to keep an eye on. But remember, the markets are volatile. They are getting volatile, more volatile by the minute. India VIX suggests that it's up 4.3% this morning and back above 14 levels at 14.21 currently. The mid cap and the small cap space, remember, in my opening statements, I had mentioned that there was a recovery that was playing out, but they have reversed course since then. Both indices have fallen sharply from the day's low and continue to fall. The mid cap index is down 1%, over 1% as we speak. The small cap index, that's down 0.66%, very close to its day's low. So be cautious around the broader markets. Nifty is also, seeing some of that rub-off effect with the crash that we are seeing play out in the broader markets. It's down 0.7%, Sensex is down 0.6%, but 21,900 is going to be a crucial support for Nifty, and if we are able to bounce from there on, 22,000 is something that we need to take out. But even if we don't, it will be a period of consolidation. That's what our experts are saying. Maybe the correction, at least in the large caps, won't be as deep as it was through the week, but broader markets, be cautious over there. There are some pockets of opportunity that will emerge, because remember, even if these indices have fallen by 12 to 14%, the constituent stocks, they are around 20 to 30%. So pretty much, some of these stocks that moved up by 50 to 60%, now they are just sitting at moderate gains of about 25-35%. So they are again becoming attractive. I think more opportunities you'll find in the mid-cap space. That's a smaller universe. There are just 150 mid-cap stocks out there, and that's where that institutional money has also come in. We have seen some bit of re-ratings as well. So maybe it's the mid-cap universe that you can focus on if you are looking for value, but the market correction is still on. We have not yet made a near-term bottom. You can see that within the price charts, both indices are feeling the heat this morning, but be cautious. That's all we can say. And with that, let's wrap this bulletin.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me. When you come into a stadium, this is the highest level of pressure. When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless. Mind and body are entangled sensations. That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
Winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
Hello and welcome. You have tuned in to World Business Report here on News9 Live, where we get you the latest in the world of business, economy, finance and technology from all across the world. I'm Krishna Kumar. SpaceX's third attempt at an hour-long test flight of its massive rocket ended in disappointment as the spacecraft was lost during its descent back to Earth on Thursday. According to news reports, contact with the Starship was severed as it neared its intended splashdown point in the Indian Ocean. The flight encountered troubles early on when the first stage booster disintegrated over the Gulf of Mexico shortly after liftoff from Texas in the US. Despite the setback, SpaceX's Dan Duot has said that the ship has been lost, so no splashdown today, noting that progress made compared to previous attempts. Despite reaching an altitude of about 145 miles and coasting across continents, Starship abruptly lost contact 49 minutes into the flight, just 15 minutes before its scheduled conclusion, presumably breaking apart over the Indian Ocean. Now, Apple has taken a major leap forward towards enhancing its artificial intelligence capabilities with the acquisition of a startup called Darwin AI. By integrating Darwin AI's expertise and talent pool into its operations, Apple aims to leverage cutting-edge artificial intelligence technologies to further enhance its products and services. By incorporating Darwin AI's team into its AI division, Apple gains access to top-tier talent and expertise in machine learning, computer vision, and natural language processing, among other AI disciplines. This influx of talent is expected to fuel Apple's efforts in advancing AI-driven initiatives across its product ecosystem, spanning from Siri and intelligent assistants to autonomous systems and predictive analytics. With an increasing emphasis on responsible AI development and ethical AI practices, Apple aims to lead by example in shaping the trajectory of AI innovation while upholding principles of fairness, transparency, and accountability. And keeping it with Apple, Apple's supplier Foxconn anticipates a considerable revenue surge in the year 2024. Despite a sluggish start to the year, the company foresees a robust uptick driven by soaring demand for AI servers. Now, this projection follows their fourth quarter profit surpassing all expectations. More details in this report.
iPhone maker Foxconn has had a slow start to the year, but it believes things are about to turn around. The Apple supplier said Thursday it expects revenue to rise significantly this year. It credited booming demand for AI servers as one factor after it posted fourth quarter profit that beat market expectations. The outlook has turned brighter since November, when Foxconn said it had conservative and neutral expectations for 2024. The Taiwanese company said October to December net profit jumped a third on the year to $1.69 billion. It saw strong demand for AI servers and increased sales during the peak year-end holiday season. Consumer electronics, including smartphones, made up most of the revenue. Foxconn is the world's largest maker of electronics for other brands. It now expects sales for the first quarter to fall slightly from a year earlier. The period is traditionally quieter than the fourth quarter, when it races to supply goods for the Western year-end holiday period.
Now, Hyundai Motors and its sister company Kia have made a major announcement regarding the recall of approximately 170,000 electric vehicles in South Korea. This decision comes in response to problems that have been identified with the software integrated into the charging systems of these vehicles, and that's according to South Korea's Transport Ministry. According to the ministry's statement, Hyundai will be recalling more than 1 lakh or 100,000 EVs in South Korea, encompassing various models including the Ioniq series and Genesis models. Additionally, Kia will initiate a recall affecting over 50,000 vehicles under its brand. In response to these safety concerns, the automakers have opted for voluntary recalls. The recall procedure is scheduled to commence from the 18th of March, that's Monday, marking the beginning of a comprehensive effort to rectify the software-related issues across the affected EV cars. Now, keeping it with the auto space, as reported by the Japanese media this week, Honda and Nissan could form an alliance. Nissan's board did meet to consider partnering with its larger competitor, with the Nikkei suggesting a focus on electric vehicles to rival Chinese competitors. Both Nissan and Honda might perceive a necessity for action due to dwindling market shares in China, the world's largest car market, amid intensifying competition from local contenders like BYD. And the Nikkei suggests that they might need to curtail production in response.
Honda and Nissan could be set to join forces. That's according to Japanese media reports this week. TV Tokyo says the Nissan board met Tuesday to consider an alliance with its larger rival. The Nikkei then reported that the pair could work together on electric cars in a bid to compete with Chinese rivals. Neither firm would comment on the reports. Nissan already has a long-standing alliance with Renault. It has also committed to invest in Ampere, the French firm's new EV unit. But the two companies restructured their partnership last year to make it more flexible. Renault has since signed agreements with new partners including China's Geely. Nissan and Honda may both feel a need to act. They've been losing market share in China, the world's biggest car market. That's amid mounting pressure from local rivals like BYD. The Nikkei says they may have to cut production there as a result. It says the pair could now share vehicle powertrains and cooperate on parts procurement. The collaboration could reportedly extend to batteries and even joint development of new EVs.
Shifting focus to Wall Street, where stocks faced a decline on Thursday with concerns over a surge in producer prices, sparking speculation on potential delays in a rate cut from the US Federal Reserve. The Dow, S&P and the Nasdaq all faced roughly a 0.3% drop. Data revealed a higher than expected increase in US producer prices for the month of February, primarily driven by surges in gasoline and food costs. Consequently, market sentiment shifted, reducing the odds of a rate cut in the month of June to about 63%, down from over 80% just a week ago. More details in this Reuters report.
U.S. stocks dropped on Thursday as a jump in producer prices left investors wondering if the Federal Reserve might wait longer than expected to cut interest rates. The Dow, S&P 500, and the Nasdaq all shed roughly 0.3%. Data showed U.S. producer prices increased more than expected in February as the cost of gasoline and food surged. The market has trimmed the odds of a rate cut in June to about 63%, down from over 80% just a week ago, according to CME's FedWatch tool. Shana Orsic-Sissel, CEO of Bonry and Capital Management, thinks it should be later than that.
We obviously have sticky high inflation, and if that is the Fed's goal, is to bring inflation to 2%, and that is when they'll feel comfortable cutting rates, we're not even close. As a matter of fact, we're going in the wrong direction.
Other data showed U.S. retail sales rebounded in February, but less than economists expected they would. In company news, shares of Nvidia fell more than 3%, while an index of semiconductors was down nearly 2%. The index is down 3.5% for the week so far, with investors taking profits after recent sharp gains. And shares of Robinhood Markets rose more than 5% after the trading app operator said the value of its assets under custody rose 16% in February.
And with that, we are taking a very short breather here on World Business Report. We'll be back with lots more in just a jiffy. Don't go anywhere.
Annapurna protected me. Annapurna made sure that I come back home and live this life. And
film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News9, plus subscribe and get free vouchers.
There's a new video around what deepfake can do.
We have seen a trailer of this a few days back.
Rumors should not be only on the platform.
We'll have to wait and see how those play out.
Hindenburg's report cannot be taken as gospel of truth.
You were the chosen one to direct Mr. Bachchan for his first endorsement, for his first appearance on the small screen.
It was a life-changing moment.
Have you been a rebel with a cause?
There was a sense of responsibility, there was a sense of frustration.
Are you worried about cancel culture?
You tell a story with a fierce psychosis, you're gonna spoil it anyway.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win.
Life of a goalkeeper is something which has always intrigued me. When you come into a stadium, this is the highest level of pressure.
When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless.
Mind and body are entangled sensations.
That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
Winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
Now, the National Transportation Safety Board's chairman, Jennifer Homendy, informed senators in the US on the 13th of March that investigators remain unaware of who worked on the Boeing 737 MAX 9 door plug involved in the Alaska Airlines mid-air emergency